close today, but the Russell 2000 was under some pressure, and bulls are kind of losing their narrative here. We've got a lot of data coming up here for the rest of this week. It should bring us some action. We've already gotten action in bonds, plenty of it. We've already gotten some action in commodities. Stocks have just been hanging out near their highs, so nothing too alarming just yet. Tomorrow's data is really important. But the first thing that needs to be taken into account for bulls is that they've kind of lost the impact of their main hero, which has been Nvidia. Look at the way we keep getting strength in Nvidia, and the market's not responding. The correlation's broken down, so that's the first thing. This is kind of that live by the sword, die by the sword thing. You have to have a lot of rotation if Nvidia is not going to power the market. The 10-day correlation has dropped substantially, now negative 0.44. Look at the way it has been for months. This is the year-to-date chart, obviously, so what's happened to Nvidia has happened to the market. As that breaks down, that means you have to have something else replace it. We've had two main themes to the bull market, which has been Nvidia, number one, number two, Goldilocks. And Goldilocks I've described as being represented by the range-bound tens to twos, the yield curve spread that has pretty much told us the economy is good enough to handle the inflationary pressure that it's creating and good enough to hold on its own even without Fed cuts. But that's starting to break down too a little bit. The manufacturing data that we got from ISM continued the trend that we've seen from recent numbers, showing us that activity is slowing while inflationary forces remain present and problematic. We also saw that JOLTS dropped off pretty notably. JOLTS have been pretty stuck just below 9 million, and to see them drop off tells us that maybe actually the rock that's been holding us together, employment, could potentially be fragmenting a little bit. So I haven't changed the light for my risk radar, but I'm wary because if tomorrow's services come in light and it doesn't get the response that the market wants, i.e. yields down, stocks up, then we might have lost our entire kind of narrative here, because it seems like Nvidia, we've reached the limit of its impact there. And it seems we've also reached the limit of the impact that soft data can have as a positive. The tens and the twos, I'm not changing anything on the risk radar, okay? But tomorrow, let's be aware, because I'm itching for that yellow light for stocks because it just feels like Goldilocks is kind of shifting a little bit. Look at the tens and twos, look at the spread. The blue line here is showing some volatility. Look at the way we widened out and then we came back down. As I've said, stocks don't really like volatility in the yield curve either way. We don't like it when the yield curve's steepening up like it did a week ago when we were at the highs for the 10-year yield. Stock market didn't like that. I've got the Russell on here, the white, to show that, as the small caps are the most sensitive, because the small caps are a bunch of businesses that have debt, that have the weaker financials, and that would really like cuts. But if they don't get the cuts, then they need the economy. But if you lose the economy, they don't really have anything. And that's where the Russell just can't win. We had a little bit of a bid in the Russell, rejected again, came off while yields were down. The fact that we've gotten yields down, Russell down, and then we had yields up, Russell down, rejected again at 21, tells us that we're kind of running out of bullish themes. So bulls need something to come back. They either need to have a massive big tech rally spurred by Nvidia, or they need to have data hit that perfect level. So let's see how services go tomorrow, because if they go like manufacturing did, it shouldn't be good.